Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the cyclicals. Okay, so since technology has been under pressure, the cyclicals, we've got Lululemon here, we've got some of the brick and mortar type of retail businesses that are bouncing right now, retail companies such as we've got Rite Aid, Sears, Walmart, JCP, Target, Lowe's, Kroger. And then we've got a couple of small caps at the end here. So first off, let's take a look at Lululemon. Okay, ticker symbol LULU. This was a huge move today. It closed up 9%, so that was a giant move after reporting good earnings. And so now it's on blue sky breakout mode. So it's hitting all-time high levels. It hit the all-time high today at what was that? 88 basically, 87.98, and pulled back from that level. So that's going to be the resistance level to break. It's going to have to push above 88 and keep making new highs now because there's no past history of trading at these levels on the chart. I'll show you in just a second. So you have RSI at 63, so there's still a lot of room to run until the overbought level. As you can see, Lululemon can trade for multiple weeks in the above 70 zone on RSI. Okay, so you have Fasto at 79, so it's not even above 80 yet. Lululemon can get cruising above 80 on Fasto. As you can see, this big run here between November and December was above 80 on Fasto, and then a portion of that here, the whole run in December, was above 70 on RSI. So that's just showing you here at this level that it's got some room to run. Now this is hitting a prior resistance level. As you can see on RSI, when Lululemon hits this level, it's been having a hard time breaking the 60s. So if you see it bust up and get above 70, that's going to be very bullish, and that's going to signal the bulls are still strong. Now on the daily chart, you can see it had this sideways channel going, and it broke out today above high close horizontal resistance. So that was a really good move. This closing price here on the 6th of March was the key level to break. That was the top of this channel, and so you can see here now it needs to hold that level. So if it can stay above 84, that's going to signal that it wants to keep pushing higher. If it drops below 84, then it could come back and fill this gap and test the middle Bollinger Band at 81. It needs to stay above 81 to keep the uptrend going. Now when a stock is trading in a channel and then breaks out of the top of it, it needs to stay above that level to signal that it wants to keep pushing higher. Notice the big volume behind the move today. PSAR bull flip. Check out the MACD bull crosses on both time frames. So this is signaling the possible start of a new uptrend. If you look here at Lululemon options, it was pretty interesting. Check out the March 29th options here. Notice how they were red for the calls. Even though Lulu was up 9% today, you had major downside on the calls due to time decay. So time decay is not your friend when trading options. So keep that in mind. Yeah, you need to, and as you can see here, the contracts that were further out, like the April 20th contracts, paid off nicely today. Not what you would really expect with a 9% move, but still, a 100% gain, anybody would take that. And as you can see here on the Lululemon monthly chart, you can see this is the whole history of the trading of the stock. It started trading back here in 2007, okay, and it had dropped down and made the low around 250, and then now it's up here at the all-time highs. Notice how it had been in this, you could call this a sideways channel here for multiple years. It had been trading up and down, cruising, but basically it's been trading between 47.50 and this 80 level for the past several years. And so for the last few months, it's been breaking out above that level. The close above the top back here in December was your big clue that it was heating up, and then January it held that level, and then the last 2 months it's been pushing higher. So as long as Lululemon is staying above 80, EMA 4 and 80 on the monthly chart, if you're a longer term swing trader, the signals to just keep riding. This could go, it could keep pushing for an extended period of time. If you're a long-term investor, there's no reason to sell if candles are riding the EMA 4 support higher on the monthly chart. Don't worry about the daily fluctuations. As long as this monthly chart is super bullish and it's breaking out to new levels, the signal is to keep riding. Now it's different if you're a short-term trader, and that's what we mainly focus on. That's what we do. And so what we do is we follow the intraday charts. And as you can see here now when you're in a blue sky breakout, really, the only trading that's going to show resistance is going to be the intraday charts. And so first up, I want to show you the gap. There's a gap between high of day yesterday, that's the top of this candle on the 27th, and low of day today, that's down here at 83. Okay, so it needs to stay above this 83 level. Notice it's lined up with the 50 simple moving average. If it drops drops down and gets below 83, you could see that gap fill, and then a drop down to test the 100, 200, and 300 simple moving averages. Basically, would drop down to 81, fill the gap. Okay, that wouldn't be, that's not what the bulls want to see. They want to see this level hold because that's going to signal that it's a very strong move and that it has continuation. And then to the upside, you want to see a break above this closing price at 115. It needs to get back, that's basically that 87, 88 resistance level. Here's 88 up here, and then it has to get back above the middle Bollinger Band and at 86.79. If that turns into resistance, you're likely to see it drop down, at least test this 85 and possibly that 50 simple moving average. Okay, so check out Rite Aid. Okay, so we have the different retailers that are heating up, and so we have Rite Aid here that made a really nice move today. It closed up 12%. All right, so check out RSI. Keep an eye on it for a move above 50. Fasto is above 50. It's at 65 now, and so yeah, this was alerted earlier in the day in our chat, and I didn't catch it right at the open. That would have been nice, but it did have nice follow through. And it hit our target that we had, which was the middle Bollinger Band at 168. And you can see it ran right up to that level. When the alerts were put out, it had just broken above EMAs 4 and 8, and it was testing this EMA 13, and it pushed through EMA 13 at 161. You want to see that level hold, and it has to stay above EMA 4 now. Both EMAs 4 and 8 are 157. It needs to stay above those levels. If it drops back below, that's going to signal it's not ready to go. Now for tomorrow, it has to break the middle Bollinger Band at 168. Fail to get above the middle Bollinger Band, and that's going to signal more consolidation. You're going to see EMA 13. Basically, it's been in a downtrend. Okay, it's tried to get an uptrend going here, and it failed, and it's been in this nasty downtrend. And the only way to get a new uptrend going is if it turns the middle Bollinger Band, which is the 20-day simple moving average, into support. If that happens, then the next targets are going to be up here at the 100-day simple moving average and the 50-day simple moving average at 190 and 195. Yeah, and check out how it just started a bullish crossover on the MACD 12, 26, and 9. You already have a MACD crossover on the 8, 13, and 5, which the 18, 13, and 5 signals before the 12, 26, and 9. And then check out the PSAR bull flip. This is the first time that the green dots have flipped below the candles since the downtrend. SAR stands for stop and reverse. That's another indicator that's signaling a possible new uptrend is beginning. Now check out Rite Aid options, call options. They returned really nice gains today. Check out this March 29th, which is, time decay did not kill this option contract. It was up 300 or 400% earlier in the day when it was breaking EMAs 4 and 8, and then it had an 800% gainer. So that was a huge return. Keep in mind that the implied volatility is much higher for Rite Aid than a stock like Lululemon, which makes it much more risky to trade the options. Okay, if you look at Rite Aid on the 15-minute chart, look at this very strong uptrend. Check out how it rode EMAs 4 and 8 the entire day. I mean, you can't ask for a more bullish chart than that. And so what we were looking for today in the chat was a break above this 300 simple moving average. Okay, so that was the key level. Alerts were put out when that level was breaking, and then it held, and so that was our signal, our clue that it was ready to head higher. And check out how it just kept riding EMA 4 the entire day. Well, it hit the 168 resistance level into the close, and it failed to break, so it has to get above 168. You're going to know whether or not it's ready to head higher by two things: whether it gets above 168 and whether or not this EMA 4 at basically 167 holds. If you see it drop below, then you're going to see 165 on deck. And if EMA 8 breaks, that's when you could see a possible pullback to test that middle Bollinger Band. It has to hold the middle Bollinger Band at 160 to keep this uptrend going. And now that it's above that 300 simple moving average, it needs to stay above that level as well. It's currently trading above all the moving averages that we follow on the 15-minute chart. This is as bullish as it gets. We'll just have to see if it can follow through. Look at the big volume today. Okay, another one. This is another blast from the past. When's the last time you went to a Sears, right? Okay, so there's still a thing called Sears, and I told my son about it, and he had never even heard of it. And I think he's only 6 years old, but that just shows you. I mean, he knew what Amazon was, but obviously, just it's interesting that we had the White House has been slamming Amazon, and so what's going on is it's creating a bid for some of these beaten up retailers, and so now you have SHLD here making a nice move. move. It closed up 12% today. This was a good follow through. If you look down here, it made a bullish move above the middle Bollinger Band yesterday, and so that's the dotted purple line. It had been working on turning that level into support all through February and in March. Basically, you could draw a channel here, and so it basically had been channeling out, and then what you do is you draw a resistance line across the top of the channel, the high close on the white candle that's the top, which would be this candle right here on the second, and today's close above that level. That's our signal that it wants to keep pushing higher. Okay. Also, the huge development was the close above this green line. That's the 50-day simple moving average at 255. If that level turns into support, that's going to be your signal. Okay, yeah, this is going to want to head higher, and then we're looking for a run now up to the 100-day simple moving average at 328. It needs to stay above this 274 level. It needs to stay above this closing price on the 2nd of March. If it drops back below, then you could see that 50-day simple moving average tested, which that happens many times. When you break a key level like the 50-day simple moving average, many times it will need to be tested before it can break out to that next level. That would be normal. What wouldn't be good is if it dropped back below that level. That would signal it's not ready to go. In order for SHLD, for SHLD to remain in play for Sears, it has to stay above the 50-day simple moving average. Keep in mind it is on a 3-day run already, okay? And today's candle did push through that upper Bollinger Band, so you don't want to be a chaser. There is likely to be opportunity to catch this on a pullback. Okay, so let's look at SHLD for the call options. As you can see here, they're big gains today. 300%, 200%. It returned some really nice gains, and once again, it has very high implied volatility. Anytime you have a penny stock that trades options, it's much riskier than a large cap. And so as you can see here on the 15-minute chart, it's had a very nice multi-day run. So keep in mind this is a 3-day run. It heated up back here on the 26th when it got above that middle Bollinger Band, and then into the close on the 26th, it got above the red line, which is the 200 simple moving average. Well, yesterday it got above the blue line, which is the 300 simple moving average, and that was your signal. Okay, yeah, this is really happening. It's in play. Now it's above all the moving averages, and as long as it stays above, the signal is to keep riding. And so notice it got below the middle Bollinger Band, but got back above today. And so what you want to be watching tomorrow, two levels. You want to watch the middle Bollinger Band at 275. That level needs to hold. If that breaks, you could see a drop all the way down to the 50 simple moving average at 263. And then to the upside, it needs to break that high close horizontal resistance level, which is up here around 283. So a breakout above 283 would signal it wants to head higher. A drop below 275 would signal possible consolidation, and a drop down to 263. Okay, another one to take a look at is Walmart. So this chart's really setting up. All right, so Walmart, had a 2% gain today, but the options delivered really good gains. Check out the call options here. I mean, a 300% gain on a 2% move. Now that is the power of options, right? And keep in mind, it can work for you and it can work against you, but it's always nice when it works for you. And so today, Walmart, it's just really heating up here. Okay, so it's at the key level. It's at what we call a flex point. Where either resistance or support is going to break, and so it's right there at the key level. It's hitting the middle Bollinger Band currently at 87.84, and if it can get above that level, that's going to be the big clue that, okay, yeah, now it's finally ready to head higher. And what I mean by get above that level is close above. It needs to close above. It's always the close. As you can see back here on the 21st, it broke the middle Bollinger Band, which is the dotted purple line, and that's also the 20-day simple moving average. It broke it intraday and pulled back, and that signaled it wasn't ready to go. And it even back here in February, look at the head fake. It got above, and then bam, it had that nasty gap down. That was brutal. That was really brutal. It was signaling it was heating up, and then they dropped the floor out. So that was nasty. Right now, it's been trading in this sideways channel, and that's a signal that it's found support. Okay, so it's found support between 86 and 89. Okay, so now if it can break above, basically, first step is this middle Bollinger Band, 87, 84. So if you see Walmart trading above 88 tomorrow, that's going to be your clue. Okay, it's in play. And then it's all about the close. Keep in mind the last hour of the trading day is when they've been dropping the floor out, and so it's all about that last hour on what they have for buy or sell orders. And so yeah, if it's heavy sell orders tomorrow for the last hour, this could possibly, it could pull this kind of move where it's up intraday and then it pulls back. I'm just explaining that it's all about the close, and it has to close above for this to be a good play, but it's in that setup mode, and you should really keep an eye on it because it's right there. Tomorrow could be the day, and it could not. To the downside, if this red line right here at 87.20, the 200-day simple moving average, turns into resistance. Notice that it's closed below that level 2 days, and it's closed above it 2 days in a row over the last 4 days. If the red line turns into resistance, similar to the way the middle Bollinger Band is, that's going to signal major downside risk, and you could see a drop down to 81, down to the 300-day simple moving average. So it's really important that it stays above the 200 and breaks above the middle Bollinger Band. Notice how the red line and the dotted purple line are both converging. I mean, that's not a good sign when you have the short-term moving average like the 20 crossing over the 200 at the downside. That's a red flag. But nonetheless, the candles are at a flex point where a break is going to happen. And so what you need to watch is the 15-minute chart. And today it was really interesting. It just hugged this 300 simple moving average. This is the big level on the chart. It's the blue line right here. As you can see, it's currently at 87.73, and so it got above that level over here at 11:45 and 12, and it just worked the whole day on this level. Okay, so it closed right at the 50-yard line. It was a really tough call on whether or not to jump in here because it didn't give the clear signal. It could go either way right now, and so basically going forward, it has to hold this blue line. Okay, so if it stays above the 300 simple moving average on the 15-minute chart tomorrow, it will remain in play for a bullish move to the upside. If it drops below, that's going to signal more consolidation and not ready to go. It's as simple as that when you're trying to turn the 300 into support, and then after it gets moving forward, then you can be talking about the other support levels. Similar to over here, if you look at the shield chart, how it got above the blue line, and so it had to stay above that level, and then the other moving averages crossed above the 300, and then you start having to stay above those. But in the beginning, when the chart is setting up, it's all about having tomorrow to be all about that blue line and have to stay above the 300 simple moving average. So keep an eye on it on the 15-minute chart. Okay, let's look at JCP, another one that's heating up. So yeah, this is another blast from the past. When's the last time you've been to a JCP? And yeah, it's closed up 5%. And so as you can see down here, it had this huge pullback. And then today there was the close above EMA's 4 and 8. That is the bull signal. Okay, if you look at this pink line here, there was a close below this on the first trading day in March. Okay, it had closed above on the last trading day in February above the pink line. And then in March it closed below. And all these candles closed below that pink line until today. And so with all these other charts that I just showed you running that are in similar sector, you have to keep an eye on JCP. It could follow suit. It could pull a RAD and try to make a move to the middle Bollinger Band, or it could possibly get a multi-day run going for like SHLD or Sears. And so we'll just have to see if it can follow through. Now, if it drops back below EMA 4 at 299, it will no longer be in play. It will be a risk to hold long if it closes below EMA 4. Anything closing below EMA 4 on the daily chart is a risk to hold long. If it closes above and holds that level, it's in play for a technical bounce, and it needs to get above EMA 13 at 310, get above that level, and it's the middle Bollinger Band at 325. It has to turn that middle Bollinger Band into support to get a new uptrend going. You could possibly see a nice move between the current level and the middle Bollinger Band. Yeah, and so it's basically like this move back here in February when it got above. That was a signal that it wanted to keep going. Okay, so yeah, if you look at JCP options, the call options are heating up. There were some nice percentage gains today, so it does trade options, so keep an eye on that, even though they are thinly traded. And so on the 15-minute chart, you can see it's working on the 300-day simple moving average as well. That's the blue line, currently at 303. And so if that level holds, that's going to be your signal, okay, yeah, this is in play, that it does want to head higher. And what it needs to break is this high close resistance from the 27th. If it can get above 310, that'll be the clear signal, okay, yeah, it's pushing higher. If it drops below 303, 304, that's going to signal that it's consolidating, and then it'll come down and test this convergence of the 20, 50 and 200 simple moving averages here on the 15-minute chart, basically the $3 level. If it drops below 3, that'll be a major red flag that JCPenney is just not ready to go. Okay, take a look at Target. So here's TGT. Okay, so here's Target, and as you can see here, it pulled the head fake today. Okay, so it has the nasty downtrend going. It closed below the middle Bollinger Band here. All the retailers have been under pressure, and today it had an intraday bullish move above the middle Bollinger Band. Okay, so that's currently at 70.94, basically 71. If you see Target trading above 71, that's going to be your signal, okay, yeah, it's in play, and then it has to close above that level. If it can, then we'd be looking for a run up to the 50-day simple moving average at 73. That's the upside potential between the current level and the next two big resistance levels, 71 and 73. Now to the downside, if EMAs 4 and 8, currently at 69 to 69.50, remain resistance, or even EMA 13 at 70, you can see it hit that level and pull back. You know, if these three moving averages continue to be resistance, then you're going to see the 100-day simple moving average at 67.54 tested. Okay, it's headed that direction. That level has to hold. If it drops below the 100-day simple moving average, you could see it drop all the way down to the 200-day simple moving average at 61. So keep an eye on Target. If you see it close above that 69.50 level, you close it, you know, up into that 70s, 70, a little over 70, that's going to be a bullish signal. You know, if it remains below 69 and lower, that's going to be your red flag. You know, obviously it trades options as well, so keep an eye on the call options to see if they heat up, if it breaks resistance. And so if you look at the Target 15-minute chart, you can see here it head faked today. It's never fun when that happens. If you're long, it had that bullish move. It got above the 300 simple moving average, and then the problem was it ran up and hit this high at 71.80 and pulled back and formed that long upper wick. This long upper wick was your signal, okay, yeah, it's not ready to go. They're shorting it, especially when they formed the red candle after. That was a signal that was pulling back, and if that wasn't a red flag enough, it was the turning the 300 simple moving average into resistance here was a red flag as well. And so yeah, the share price pulled back, and so now it needs to get above all these moving averages. Keep an eye on it for 732. If it can get above that level, that's going to be your signal, okay, yeah, it's ready to head higher. If this 69 level turns into resistance, then you're looking at 68.40 and down here at this 68 as the two key levels to hold below. Okay, let's take a look at lows. Okay, so LOW. Okay, this isn't ready to go, but it's trying to heat up over here. It got above the middle Bollinger Band on Monday. Okay, it hit the 100-day simple moving average at 90. Okay, and it failed to break that level and pulled back. Notice there's this gap on the chart. So there's a gap between high of day on this candle just above 92 and low of day on this candle around 95.50. And so the setup for this play is it has to get above the middle Bollinger Band, currently at 86.42, and so if you see a close above that level again, that's going to be a very bullish signal. You know, there was a gap up open here, so there was a space between high of day on this candle and low of day on this candle, and yesterday's candle came down and filled the gap, so that's good. There's no unfilled space on the chart. Now it held support today. It's holding. You can barely see it. Down here's the 200-day simple moving average at 83.61. It has to stay above that level. If it drops below that level, that's a major red flag, and then you're going to see that 300-day simple moving average at 82 tested. I mean, you have the 200 to 83 and the 300 to 82. This is major support for lows. We're talking about the 200 and 300-day simple moving averages. This is where people load, right? And that's why you see this action right here. That's why you see, sorry about all the circles on the chart here, but that's why you're seeing the big consolidation in this zone, is because people are finding some value down here, and they are loading off of these key longer-term simple moving averages. And so basically you can see it pulled back into this tight channel, and so it needs to get above the channel here to get going. And so it's in the sideways consolidation loading zone, the load zone. And so back above 86.50, that's going to be a red flag or a green light. And then if it can get above the closing price on the 12th, that's going to be your signal. Okay, yeah, now it's really heating up. And then what you're looking for if you're a bull is that break above the 100-day simple moving average, and that would put the bottom of the gap on deck. You could see a run up to 92. Okay, so but if it drops down below this support level here, the bottom bottom of the channel, that's going to be your red flag, putting that 200-day simple moving average on deck. Okay, so we're looking at the lows. Sorry about that. This is the 15-minute chart I wanted to have set up for you. Yeah, so you can just see the key levels to break real quick. Sorry about that. Yeah, so on this chart, it's going to be all about the 50 simple moving average. You can see here it's above the middle Bollinger Band. So see the dotted purple line, and so it's above the middle Bollinger Band, so it's heating up. So if it can stay above 85.62, that's going to be bullish. Okay, so it's holding this 85 support zone, 85.25, and then what it needs to get through. Check out how you have the 300, 250, and 100 simple moving averages all converge at the same level. Once it gets above this top one, which is the 100 simple moving average at 86.83, that's going to be your signal. It's ready to head higher. So if you're seeing it trading at 87 and above, that's going to be a major green light for low. Now, if it drops down below 85, that's going to be a major red light, and that would be putting this low back here on the 23rd back on deck. Okay, another one to take a look at is Kroger. Okay, so Kroger is another consumer staples. This is your food retailer. I'm trying to show you different retailers here because Amazon has taken over the world, and yeah, and now some of these guys are trying to heat up, and so you can see Kroger is down here with that same sideways channel that Lowe's has, very similar, and it's trying to find support down here at 23. So keep an eye on this 200-day simple moving average currently at 24.09. It's been hitting that level and failing to break. Once you see it close above that level, that should be the signal that's finally ready to go. And then you have the bottom of the gap over here, and then the top of the gap up here. And so what could happen is it could get back above this middle Bollinger Band, break above the bottom of the gap, and then fill the gap and run up to that 100 simple moving average and the 300 simple moving average up at 26. Now, if it drops below 23, that will be a major red flag signaling downside risk. And yeah, that's basically right now that's the bottom of the chart. I mean, Kroger is at the bottom. It's trading below all the moving averages, and it's super bearish, trying to find some support. So we'll see if maybe it can get a little break above that 200-day simple moving average. So keep a close eye on the 24 level. And then yeah, if we look here at the 15-minute chart real quick, sorry I didn't have that all set up for you. Yeah, you can see here it's all about the 50 simple moving average here, and so once it gets above this 23.80 level, that's going to be a signal it's heating up, and then the other big level is up here at this 24 zone. That's the high close, and so you start seeing it trading above 24.5, and that's going to be a signal that it's ready to head higher. If it drops down below the 200 simple moving average at 23.50, that's going to be a red flag, and you could see the 23.45 and the 23.25 levels tested. Okay, finally, a couple to finish up with is here HEAR. Okay, this is a couple of small caps just to finish up with. It had a really nice move today. This was alerted yesterday in our chat. This is a chart from yesterday, and it was breaking resistance, and what we were looking for was a close above the March 5th closing price, and so it pulled back right below that level yesterday, and we were also looking for a break above this January high close and the 200-day simple moving average at 62, and today it broke above all three levels, 1, 2, and 3, and so that was a very nice close above resistance. It did close at high of day, and so there's no upper wick on today's candle. That did stretch Fasto all the way up to 100, so it's temporarily overbought, and you have RSI at 73. With today's candle pushing well above the upper Bollinger Band, you're likely to have the candles work their way back into the bands. If they don't, what you want to see is the next resistance level is the 300-day simple moving average at 74. If it keeps pushing to the upside, that will be the key level to break. It will need to close above that level and head higher. If it fails to break that level when tested, that would signal a temporary top. Now, if the candles do take a breather here and fail to break this 68 resistance zone, then what you want to see is that the 200-day simple moving average at 62 hold. It will be a major red flag if it closes back below that level. That would signal more consolidation, similar to back here in March when it got above the 100-day simple moving average and pulled back below, and it had to consolidate before it pushed higher. You want to see it stay above that 200-day simple moving average now that it's trading above that level. Okay, on the 15-minute chart, you can see HEAR was super strong, just a very bullish uptrend. Keep an eye on 65 on the 65 level. If EMA 4 support breaks, you could see a drop down here to EMA 8, and then basically it has to hold hold this middle Bollinger Band at 61. As long as that level's holding, the uptrend's still intact. The drop below would put that 50 simple moving average at 57 on deck. And then over here you've got BIOA. This is the last one I'm going to finish up with. This does trade over the counter now. It had a gap up open today above that middle Bollinger Band, and then it pulled back below. So this is only in play for a long trade if it stays above that middle Bollinger Band at 0.05. It looks like it came close to filling the gap below. There's a gap down here to down to 4 cents. If it dropped down to 4 cents, that would fill the gap. If it can close above that middle Bollinger Band and stay above the EMA 13, then it could get a new uptrend going. So it's all about staying above that middle Bollinger Band and that 5 cent level. And then as you can see here on the 15-minute chart, what it needs to do is get above this two levels is the 0.045. You can see hit that multiple times, and then 0.056. That's the 300 simple moving average. If it can get above that, then you're looking at 48 and that 50 zone. And then above 50 would signal that it wants to, above 5 cents would signal that it wants to break out higher. Okay, if it fails to get above 45, it has to hold this 43 level. That would be a major red flag. And then, yeah, basically it's got to, it needs to break above 45 to continue being in play. Okay, thank you very much for viewing this video. If you'd like to look, and basically it closed today not in play, to clarify, because it closed with the black candle and it closed below the middle Bollinger Band. A lot of people have been talking about this, so I'm posting the video, or put it in the video, but just to keep in mind that this was not a good setup because it closed below the open, and our signal is to head to the sidelines when a black candle forms. So this is just something to keep an eye on. If it turns that 5 cent level into support, then it could get moving. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out our chat. I'll post the link below the YouTube video. Thank you.